Hey traders, welcome to the Wednesday live stream. I'm Todd Gordon, founder of Trading Analysis, and have the team standing by ready for a good Wednesday session here. That's the right one. Perfect. All right. So good morning. Let's just check the markets here. Just get a rundown of what is happening here. Reset that baby. Oh, of course that's not. Oh, great. Okay, let me just say good morning to the guys here real quick, and we'll get you updated on the market open. Good morning, Alex and Terry. How you guys doing?
Good morning.
Good morning, Todd.
Alex, or actually, let's start with Terry. Do you have any flooding there in Texas? How's everything going? Did you guys make it through okay?
Man, I'm telling you, it was bad last week. Imelda, tropical depression, Imelda just kind of formed off the coast overnight and then very slowly moved into southeast Texas, and some places dumped 40 inches of rain, mostly south of I-10. Fortunately, I live north of I-10 and we're high and dry here, but yeah, there was a repeat of Hurricane Harvey, unfortunately for a lot of people.
Oh my goodness.
It's really sad. Yeah, it's you know, that's just a hazard, I guess, living close to the coast. And you know, the storm just sat there and just pumped a bunch of rain. Now, parts of I-10 got damaged. The bridge at San Jacinto got damaged, so we're kind of cut off. The main I-10's a main thoroughway all the way from LA to Jacksonville, Florida, and a lot of traffic flows right through here.
Oh,
so all that traffic is having to get rerouted to find its way. Yeah, big mess, but it's all over now, and you know, people got a recovery cleanup going. And
good, we're thinking about
you. Shout out to the Cajun Navy, our friends from Louisiana.
Yeah,
and they're a great relief organization that they come in and help the first responders when they get overwhelmed for any type of flood situations.
Beautiful.
And they've been great neighbors to us. We appreciate all their help.
That's great. I'm glad everything's all right. That's perfect. So listen, guys, we're going to come back. Let me get the guys updated here to start, and I'll bring Alex and Terry back in. A lot going on in the crypto market. Alex has been super busy here, telling people to not be long, which is great. And also we had a big kind of altcoin movement, like 50% movement after the webinar, like an hour after the webinar last week. So I'm sure Alex is going to talk about that, but let's get you guys updated on the stock market here first. We'll bring the team back in. To start, you know, we have obviously a lot of news going on right now. Futures are really not that much impacted by the political news happening right now. So I don't know what time that transcript with the Ukrainian president is supposed to come out, but you can be sure that there's going to be a market reaction to that. So Speaker Nancy Pelosi began an impeachment inquiry into President Trump, and markets definitely moved yesterday on that news. So we'll see what comes of that, and I think that there should be a reaction to the transcript. Do you guys know? I was looking around briefly. Do you guys know what time that transcript is supposed to be released? Have they made any mention of that? I'll keep an eye on the comments there. So that's that. We have Nike out with earnings, and that is a trade that we do have on. So we'll take a look at that option position. Looks like gold. Let me just kind of zoom into my into the quotes here. Looks like gold is off 1535. It was fairly well bid, so we got a pretty good move up in gold and bonds following that news. A little bit of risk aversion. We've seen some strength in those interest rate sectors, specifically dividend payers like staples and utilities, real estate. We're still seeing that kind of value trade overtake the growth trade. Some of these kind of high flying beta stocks like Roku and Twilio and some other guys have really taken it on the chin. So we're seeing a lot of this kind of rotation continue to move forward. Next Generation says, Elliott Wave, no news here. Always pay attention to the news, guys. That's one of the, in my opinion, guys, you know, let me just, and I yell at you guys every other week or so and say, only want Elliott Wave. Look, we are a complete trading shop, right? We put our capital to work every single day within the markets, and basically you have to look at the market as a whole. Okay, I don't trade in a bubble. I don't trade in isolation. I always want to know what the news story is, what people are talking about, and what they think is actually driving the markets. Between you and I, you know what's actually driving the markets is not what they're talking about. The markets are trying to discount what's going to happen 6, 9, 12 months into the future. But I do want to know what people think the political flow is, the news flow, the fundamental flow, geopolitics, whatever it may be. Filter that knowledge through the lens of Elliott and intermarket analysis. I still have this book on my desk from last week to know kind of macro trends that are driving the markets, and outcomes, complete trade plan, which is know where prevailing crowd sentiment is, put it through the lens of Elliott, which helps us define and gives us context where we are in a trend, in a corrective market or trending in market, and then we go in and quantify risk based on where we think the market should go and not go. So we're a trading community. This is not Elliott Wave only. This is just one of several components that we use to trade the market. So please don't come in and say Elliott Wave only. That's just not the way you should trade the markets. Okay, so we're going to leave that conversation there. Speaking of, let's kind of dive in, look at what's going on in the S&P and the NASDAQ, looking at the Elliott Wave point of view. Yeah, good point. Thanks, Terry. We are doing a webinar tonight, 8 o'clock, speaking of riding the volatility wave. Let me just get that out there right now. It's going to be 8 o'clock informational webinar. We did it last week. We had some tech issues that have been addressed. If you want to get involved in that webinar, should run about an hour. It's going to be 8 p.m. Eastern Time, tradinganalysis.com/ride. All right, so go ahead and sign up on that. It will be here on YouTube, but you do need to sign up in order to get the email with the pertinent information. So hit that address at some point here, and we'll get you signed up for tonight's webinar, 8 p.m. At the end of the webinar today, I'll give you more information on what's going to be included there. Okay, thanks for that, Terry. So let's look at the broader markets here. Let's start off with the S&P as we always do. There's, I believe, enough to say that we're in a corrective wave 2 pullback here in the NASDAQ. This is one of 3 interpretations I'm looking at. We always want to be looking at multiple possible scenarios. I'm never going to sit here and say this is what the future holds, and I'm smart enough to foretell that with any degree of accuracy. I've been doing this long enough to know I'm not smart enough to tell the future. All I know is that we're pretty good at interpreting the now. And what's happening right now in this situation is I do believe we just came out of a big triangle B that's lasted from the beginning of May through the end of August. So a lot of back and forth, a lot of consolidation. It's been a really frustrating trading environment. If you're a trader on our option side of the business, been kind of annoying, to be completely straightforward. It's just been a lot of back and forth. The best trades would have just been sideways butterflies, iron condors. From our longer term portfolio management, just stayed long. Haven't really adjusted that much. I'm actually looking to add more positions here because we do see the upside as coming. So let me bring the team in here, guys. Alex and Terry, if you want to hop in here at all, you should be able to jump in and see my screen as well. But what we're seeing here, just following the end of the triangle here from August, is a nice 5-wave move up, followed by a 3-wave decline. We are going to get some weakness on the open. Actually, no, the futures just went positive by 3/100, so we might not get any weakness. But the correction that we've seen so far, it suffices as a wave 2. It overbalances any correction that we've seen here in September 3rd, as well as the one here on September 9th. And what that means is this correction that we just saw is larger in percent terms than anything that we've seen from August 23rd. So that's enough to be a wave 2. It'd be pretty shallow. And if that's the case, and we just saw a real shallow ABC correction into the 38% retracement, could be a pretty sharp rally coming here, and I do not want to miss this. Do not want to miss this. Anything to hop in there, Terry?
I'm just going to say I'm kind of glad it didn't actually break that all-time high yet, because now I don't see this head. I don't see a head and shoulders formation. in
That's a
this
good point.
pattern right now. And because right now, you know, the previous highs are all still in an uptrending direction. So I don't see a left shoulder high head and then lower right shoulder, which would indicate to me more of a rollover.
Yeah, I mean, we do have a lower high, so it actually does qualify, though, right, as a head and shoulders, but
not very dramatic.
I think the larger degree inverse head and shoulders, I think is more important. I mean, you know, you could call that a left shoulder.
That's where you can call it exactly an inverse head and shoulders.
Right, and if you look at something like this, look at XLI to get off the indexes for a second. Holy bananas! When this thing finally goes, if Boeing can get a little bit of clarification on the 737, and we can finally get that going, a little bit more Chinese progress, because there's so many, you know, Chinese companies export to China. I mean, this thing is going to rip on the upside. I mean, that is just, how many times do they want to try to get this 80 level in the XLI? We did make a new high. We pulled back, but this is clearly consolidation in here. Yeah. You know, if this thing finally goes,
high percentage of the XLI.
Say it again.
Except I said Boeing is a high percentage of the XLI, so high weighted. Yeah.
Let's actually do that. You know, Terry, will you do that for me while I'm off screen? Will you just go to that sector spider and just show me the components of XLI? Make sure we have the updated. Do you mind doing that?
I'll get it.
Perfect, thanks. So yeah, so that's that. That's the S&P. Let's go back to the NASDAQ. The NASDAQ for me is actually a cleaner triangle, which I think we're going to have to adjust one of the two wave counts here, because with the NASDAQ, I still have it in a triangle, where the S&P I have triangle complete, and we are already doing a wave 2 correction pending triangle B. This is different, that says we're still in the triangle. The implications are basically the same from a price point of view. It doesn't matter if it's wave 2 correction, post triangle thrust, or we're about to do triangle thrust, as I'm showing you here in the NASDAQ. Both point towards higher prices. To give you the context of where we are here, up on the higher daily chart, actually that's the weekly. That's fine, I can show you weekly. This is the triangle that I was speaking of. This originated back in April. It's B triangle of B that's in a higher triangle 4. So you're talking triangle within a triangle. And that's why, if you think that the price action's been, oh, thanks, Terry. I was going to have you just share your screen on that. Oh, perfect. Thank you very much.
That'll be good enough.
Yeah, perfect. That you know, if it's been frustrating on the short term, this is why. This is why I love Elliott to give me context to know, you know, well, you're in a triangle within a triangle. I mean, there's going to be higher lows, lower highs, consolidation. At some point, that consolidation will resolve, usually in the direction that was in the trend prior to the consolidation, which is up. So, you know, that's why I think we are heading higher here. A typical target that we like to use is a 1272 extension of the most recent decline. So if we can just go very simply and just do a 127.2, to get a little geeky on you, that is the square root of 1.618. Okay, your immediate upside target there in the NAS is 8279, and this is the NDX 100. On top of that, could we get some confirmation from the C versus A fib? A little higher than that. 8507 is the 38% relationship of C versus A. So you're starting to get a little bit of a cluster right there in terms of fib. So off of the weekly, back down to the daily. Here's the triangle that we're talking about. As I've labeled for members here, support in wave blue E of orange circle B, 7713 to 7556. I think this is a nice value zone that we will be moving in with our members today and tomorrow. The risk, I think, is tight. You could try to stop out below 7530. The absolute invalidation for this particular piece of analysis is a break of the C wave low at 7362. I don't think you need to go that far down because you are stretching out the risk here a little bit. And again, we're looking for a move towards 8280 to 8507. So you got to find a point where the risk against an entry makes sense compared to what the upside target is here in the NASDAQ. All right. You guys cool with that? And sorry to just ramble on. Let me just check to see how the questions are doing, how members are doing, and we'll check out the XLI. Lucas, Amazon's a mess. I will take a look at it for you, but I just, oh man, it's so hard to do get good context where we are in Amazon. All right, so let's take a look at, Terry brought up the weightings. So Boeing, I think Boeing was like 13% of the XLI at one point. Now it's down to 8.9. Honeywell, Union Pacific, United Tech, Lockheed.
But it's still in the lead is the point. So.
Yeah, absolutely. Absolutely. But it's still, it's 9% of the XLI.
It doesn't move it. Yeah, maybe it doesn't move it as much as as it used to. Mm-hmm.
Yeah, good point there. Good point. UPS, GE, Caterpillar, Northrop Grumman, so a lot of different, okay. So let's take a look at Boeing while we're on that XLI conversation. I did talk about this on CNBC. I was thinking that this C wave, this ABC down, might get down to the area of the prior fourth, and what a beautiful entry that would have been. Of course, on Fast Money, I didn't say it's the fourth wave. Wants to go back and test the fourth wave of one lesser degree, because I probably would never have been invited back on the show if I said that.
Right over the top of their heads.
Oh man.
Hey,
oh, you know what? And I said something last week.
I've been talking Elliott wave lately, so I've been.
Say it again.
Every time.
Say it again.
I said Rick Santelli's been talking Elliott wave every now and then, so I get a kick out of it.
All right, I actually got called out last week again on my S&P target. But let me just finish my thought here on Boeing. So we're doing ABC down. It would have been so perfect if the C wave reached the area of the prior fourth, because that would have completed a fourth of higher degree. It's at 292. What a beautiful entry that would have been. But, despite all the 737 MAX news, boom, right back at you. So, could that be all of wave 4? Yeah, I think so. We've broken above this trendline resistance. Looks like we're kind of nestling up against it for support. Could get a little move up, and that just ties back to the XLI conversation we just had. So last week, I did do a little Elliott wave on Fast Money, and I gave my upside target, and again, I almost made Melissa Lee fall out of the seat. She says, "What? You're the most bullish guy on Wall Street." I'm like, dude, do that. I mean, she's awesome. Right. She's great. But I'm like, what do you mean? Don't get so crazy about this. It's just simple technicals. As Carter Worth says, I don't draw the lines. The market draws the lines. Right? It's not. I'm not drawing the lines. The market draws them. So if in fact we are in a fourth wave, this is the piece of analysis that says we are in a sideways triangle. There's another interpretation that says the triangle is A, B, C, D, E, whatever. It's for the upside target. It's not that important for the discussion that we're about to have. But if you just take a look at the 2-4 trend channel, okay, you connect the lows here, right? You could use the A wave low. If it's going to be over here, it's going to be a slightly different interpretation. But then you extend up from wave 3, and you say, where's resistance? Well, it depends on the angle of ascent. How long is it going to take for us? Let me thicken this line up so you guys can see what I'm talking about. How long is it going to take us to reach that upper trend line? And I'll make it yellow and obnoxious here. Okay, if we get a Chinese deal and we go straight up, resistance would come in at this angle of ascent about 33.90. Almost 3,400. If we mess around here for a while and intersect the lower channel support just by chewing up time on the clock and then make a run, you see how the trend channel is higher than if we tested down here? If we do go into wave 4 here for the, maybe 2020, maybe we're in consolidation for the next year, then we make a move, resistance doesn't come in till 3,800. And if you just take a step back, guys, does that look obnoxious? Does that look absurd considering how far we've come? I would say absolutely not. No. The longer we go sideways and then we move higher in a 5-wave, we could see S&P 4,000. Mm-hmm. I mean, would that look outlandish? Would that look obnoxious? Absolutely not. It's perfectly on the angle of ascent that we've seen over the last decade. So, I mean, this is just why I love the technicals so much, because it allows you to just step back and say, I want to trade what I see, not what I think. And here's what I see. You know, this is a very conservative trend channel that the market drew that I did not. So once this stupid consolidation, it's not stupid, but once it's over, I can't wait for it to be done. You know, there's your upside target. What do you think, guys?
Yeah, absolutely. But you know, that's the thing. It's the time frame. Everybody's time frame is the further we get and the higher we get, the longer these corrections are going to get. The higher the degrees of Elliott wave that we start completing, the longer these corrections. And you know, I know you and I talked about this more than a year ago, maybe back a year and a half ago, and I told you, I said I see this is going to be at least a 2-year consolidation. And you know, what did we end up with? You know, from that wave 3 to that wave 4 bottom there, but we think we're still in the correction, or have we broken out of it? That's yet to be determined. At this point, we think we're finished with that.
And this could be it here too, Terry. I mean, we have to consider the fact that the correction was over. It began back here in Jan of 18. Yeah. We have now the end of 2018, 4, and then we're doing a 1-2. And if that's the case, holy cow! If this is some kind of crazy, kind of unusual wave 2 correction, I mean, I think, you know, this is the way we're operating. The market in either of the 3 scenarios that we just showed you should go to 3,200. That's what we're looking at. But if this count comes to play, we're not stopping at 3,200. We're seeing at least 3,600, which is 100% alternate price projection. Why is my wife calling me right during my member webinar? That's never a good sign.
Unless that's an emergency. You want to swing it over to Alex for a minute?
Yeah, let me do that quick. I'll come back and
swing
talk
it over
about
to Alex. We'll talk about what happened with crypto markets yesterday and what we were telling our members just on the webinar.
Thank you very much.
Member webinar that we had Tuesday. Alex, are you queued up?
Let's see. Alex, are you there?
Yeah, sure.
Okay, perfect. Let me just go to webinar, and I will bring you up right now. Okay, you're live. Go ahead, man. Catch us up. What's going on BTC? I just want to make sure everything's all right at home.
Yep. Okay, Todd.
Go ahead, Alex.
Okay. Cryptos took a pretty big move down yesterday, and we had a member webinar yesterday around I think it's around 4 o'clock my time. It's I think morning in the States, and we warned
10 o'clock Eastern.
Yeah, and basically we are tracking this for the last few months, and we have several wave counts and several scenarios here, but on the end, the break of this trend line was actually basically crucial, and we warned our members on that webinar, and I also post some charts on Twitter back in August, warning that this wave 2 didn't actually retraced enough, so I can anchor this wave 2 here. So as you can see here, you have a nice 5 waves up here, and this is clearly a corrective overlapping price action. And the guessing game here is to use some other tools that we have in our toolbox. So we are using some of the time ratios where we start to look the time ratios between the time elapsed in the wave 1 and in the wave 2. So this was one of the key things that I was looking for, as well as the wave structure. So in general, I was thinking that the 38.2 or 23% is not enough for this correction to be done, and as well the time ratio to balance this all move. So guys, it's all about the balance. When you see nothing goes linearly in the market, so we need to time up the corrections as well in time. So I think now we are dropping down to this 7.5, 7,500. We're going to see a small pullback, and then I see a nice cluster of fib ratio and time around between 6.5 and 7,000. So that will be my key levels where I will look for the signs that we are turning and going up in cryptos. So same thing, we flagged this move up in Steller last Wednesday, but actually, yeah.
Yeah, I was going to say,
Terry,
this is the
please.
move that Todd was talking about, where it ramped up right in the middle of our webinar, and everybody was going, woohoo, woo. We're like, hang on. And then, and then immediately it retraced. So, but look at the retracement level, more than 100%, guys. So false breakout. That's a bull trap.
Yeah, but this was kind of a push up in like 50-60% and move down. It's already a kind of a 60%
The
move
funniest
down.
thing, Alex, though, you said last week in this very webinar, these altcoins are at support and ready to move up. Fast forward 45 minutes later, this thing was up 50%. Alex was losing his mind in the member webinar. It was so funny. It was one of the best calls I've seen in a couple of years. It should have been all over the internet with the content that you put out there. It was amazing. Didn't have the trade on, and that's even more reason. I mean, Alex, his mind was broken for an hour.
Yeah, because I flagged this looking by this dominance chart, which we study, which is relation between the market cap and Bitcoin and other cryptos. So I was actually fascinated. How did we came up with the warnings looking by these dominance charts, and it happened basically 2 hours later. So I was really kind of shocked that we managed to do that. But actually it happened. So now we are looking for one more push down in these altcoins, because yesterday it was really a wreckage. I mean, the crypto markets was disseminated yesterday, and
I saw
guess
18 to 20% drops in some of these coins in less than an hour.
How much had it? What was the cause, Alex? Was it because the S&Ps were selling off? It seemed like they happened at the same time. Am I wrong on that?
It was about the same time, but I don't know necessarily it was related. I don't know the reason.
Yeah, I
haven't researched it.
We didn't have any fundamental news. I think it was clearly a play of a basically Elliott wave. Somebody decided to algorithmically, linearly sell all of these cryptos at once, and actually it very agrees on these counts we have for a long time. We on the contrary had very positive news for cryptos. The CME announced a possible options on bitcoins in 2020.
Bitcoin.
We have an opening on Bucket, which is your buddies there on Bucket, which is backed by a real bitcoins. It's a new So many positive things actually.
Binance US started yesterday too.
Yep, I saw that. Yeah. And this is good because it's going to be easier. And Terry is in there actively trading. You're shorting on Kraken, right, Terry?
Right.
Yeah, right. I mean, we just need more brokerage firms that allows us to short, because Bitcoin's been going down a lot more than it's been going up, and it's a wonderful trading market, but we have to be able to easily short. And that's one of the big reasons that I think it hasn't really exploded, because it's truly a two-way market. So just keep that. But it looks like there's firms coming in to service that demand, which I think is really good for traders.
Right.
Yeah, and I guess our long-term standing on cryptos, since we posed that lows at 3,000, is that this correction it's gonna wait some time more on altcoins, but we are coming closer and closer. So I think in a month or two we are gonna definitely see some good opportunities on the upside.
Okay, very good.
We were thinking that Ethereum was about to have a long position, but we were holding off. And take a look at what happened to Ethereum in the short term there. So I mean, everybody. So we talk about Bitcoin dominance, which is a relationship of Bitcoin and all the other altcoins, but really it was all all crypto markets sell off yesterday.
Yep.
Everybody went in the same direction.
Very
But
good.
now we got a nice pattern, a downtrend here. It's not over yet. There's more bloodbath to come, is what we see. And then when we get settled in, we'll make a turning point, and then it'll be a time for our members to go long. So
very good. Very good. All right, guys, thanks for that. We're going to, let's hit back on the stock market side here. Good update, good work as always. Check out Alex. Terry jumps in there and helps him with the crypto side. But Alex is running the show on the crypto and the foreign exchange side. So definitely check out Trade Analysis if you'd like more information and work from those guys. Back to the markets. Let's take a look at, again, we kind of hopped off. Everything's fine. There was something interesting that happened, but everything's good at home. We straightened it out. The other thing is, before we jump in, my little guy this weekend.
Yeah, little Jake.
Little Jake. We have our first cast in the family for the twins. So we had a little run in with the monkey bars. So he not really happy about getting a cast.
Not a happy camper there.
No. So he broke his arm in 2 places there, and he's got a little cast. But once he figured out that he could choose the color cast that he wanted, he was psyched. He wanted a camouflage cast. They didn't have it, so we got a red cast. So he's fine. He's over.
He'll be popular in class now because all the kids will want to sign his cast.
Exactly. Yeah. He wanted me to.
Son,
yeah. Go ahead.
Yeah, my son did the same, approximately same age, but they healed pretty quickly.
Yeah.
Kids. So
yeah, they do.
He's going to be fine.
Yeah, kids' bones are still soft, and they come together. They come back quickly. He wanted me to draw a snake on his cast. So I was like, why don't we just draw like a happy face or something? How about that? All right, so back to business. Enough screwing around here, guys. Throw a thumbs up for Jakey. He needs the love and support on the YouTube window. He is pissed about having to carry around a cast for month and a half. He's not happy.
Wait till it starts itching.
I told him that. I did the exact same thing in 3rd grade. I tried to jump on the monkey bars and I missed like halfway through and it landed right on my arm. It's like, so you straighten out a hanger and you get down there and you can itch it and oh God, whatever. All right, so guys, back to business. Enough messing around, but we got to have fun, right? What are we talking about? It's all fun. So we're still looking at this growth to value sort of ratio. We're looking at the IVW, which is the growth, the iShares growth ETF, and IVE, which is the value. And from an Elliott wave point of view, I still see it as in a 4th wave decline. I still see the ratio, even if you take the Elliott wave aside, I still see it as relatively overbought. Depending on where you draw the channel, it's not the cleanest quote, but you certainly can draw a channel from multiple angles, and you would say we are relatively overbought in this move from growth away from value into growth, and that overbought status should be relieved. So I wouldn't get too far into the resurgence of the high beta discretionary tech names. That being said, if you look at where we are in the bond market, we have a trade on a TLT right now that is very much in line with this count and something that we did establish back into these A-wave support here. I do think we are going into a bit of consolidation here in bonds. I think it is a 4th wave that matches up with this 2nd wave, this blue wave 2, which you can see a beautiful 5-wave move inside of 3, which is what you'd expect. That's green 5 wave move inside of blue 3. We need to work off that massive move up in bonds that we've seen. I'm labeling a triangle. It could be a flat, could be a complex. Doesn't really matter. We should hang out in a consolidation that is at least as long as the amount of time spent in wave 2 back here in December of 18 into March of 19. Equality would be right around Halloween, right around when Jakey's going to get his cast off. A 1.618 would take you out to Thanksgiving. Okay, in the US. So it's either Halloween or Thanksgiving. The trade that we have on for that particular piece of analysis is we have a butterfly. We have a broken wing butterfly. Hey, get it? Broken wing. Somebody threw that on Twitter, and I thought that was pretty funny. It actually works pretty well. So in the one nove calls, we've got the 139, 142, 144 half call butterfly. And the reason what you're doing there is you're selling two options in the middle of where you view the consolidation to be. And there's only one methodology out there, discretionary technical analysis methodology that I know of, that could tell you whether we're likely in a triangle or whether we're in a consolidation or a trend, and that's Elliott. So I think we're in a sideways consolidation in wave 4. Based on the analysis, we should be centered around 142, which is why we are using that as the body of the butterfly. TLT is overlaid here on the left side, which is the ETF4 bonds. So you can see 142 is right about there on the left scale, right down the middle of the body of the butterfly. So you sell two options in the middle, you buy one above anticipated corrective resistance and one below anticipated corrective support. So you're short two in the middle, long two at the wings, and that creates the butterfly structure. And if you just hang between 140 and 144, the longer you do, the more this theta number, which is the amount of money you make per day, which is the result of the 142s losing their extrinsic value, while the 139s hold their intrinsic value. The 144 halves will lose their extrinsic value. It doesn't matter because they're so cheap compared to the other two options, right? So the more you hang in there, watch that purple line get higher and higher and higher, and that's just more profit. The longer we hang in that zone, the more profit we can make. We have max loss of $325 on the downside, $75 on the upside. If we could get the pin at node 1 expiration, you're looking at a profit of 1160, 1180 or whatever. And again, that would just be right in line with our forecast for a sideways consolidation. If it doesn't happen, fine, we're going to manage it and we'll get out. But we are up a little money there in Nike. Bonds. I'm thinking about Nike in the next step. Also related to bonds is gold, and we're seeing a pretty good push up for the same fundamental macro reason. They rally in the same direction for pretty much the same reason. Where's my gold quote? I'm going crazy. There's silver. Am I going nuts? No. There we go. So if we look at the gold market, you're going to see a very similar looking pattern. It's a little bit more progressed, I think. I do think we are in a triangle here, also in gold. We are in a fourth wave that matches up against the correction that we saw back here in June, July. Then you have a nice 5-wave move up, followed by a little bit of correction here, and then we should see a resumption of the uptrend. So we're seeing, the flight to safety in gold. We're seeing obviously a lot of political pressures putting a bid into precious metals and bonds. Silver, I think, is also continuing to act fairly well. It's a little concerning. I actually think, I came into you guys the last few sessions saying that the gold-silver ratio is overdone. The way this is actually shaken out, I actually think we might head back up in the gold-silver ratio. I think we're about 80, 82 right now. I don't think my quote's going to work. I got to set it up every time I come into this computer. It's annoying. But we're right about 80 to 82. If you divide gold into silver into gold, I should say, you're about 80 times gold to silver. I think we're going to continue to push higher. So actually, if you want to be long, I think gold is better than silver here. All right. 3 minutes before the bell, a couple stock trades for you here. Nike, this is a trade that I've been speaking about. I did trade this live on CNBC. We do a show called Trading Nation, and it's sponsored by Charles Schwab. And I did a long trade there on Nike, did it live. You guys know I trade live for our customers at Trading Analysis, but I also trade live on CNBC. I put live positions on. I think I'm one of the only guys that does it. So we got to go through the advertisement, which is fine. But Nike, speaking of triangles, which is kind of the whole theme for this market, which is just a lot of sideways consolidation. Is it frustrating? Yeah, but if you have the context that's given to us from Elliott, you say, all right, no reason to stress until the triangle consolidation's over that we're seeing in so many markets, do something else. So I did have enough to say, guys, we're probably done with this 5-wave swing of lower highs, higher lows, and at some point we should continue higher. So we're at 91.40 here. They reported earnings. They beat on the top line and the bottom line. Very strong report. So we go over here, go to NKE. What am I doing? Active trader, NKE. We're at 91.69. We traded as high as 92.65 after the report, coming off here a little bit. I just want to check the futures. Futures are doing nothing. Absolute. The S&P futures are up 1/100th of a percent right now. So that's good. Here's the actual position that we have on in Nike. Similar looking trade as the butterfly, or as the TLT butterfly. I got to change this back to today. So here's what we're looking at. These are a couple trades are proposed. Actual trades. We have an 85, 90, 95 call butterfly. Okay, so we bought the 85s 4 times, sold the 90s 8 times, bought the 95s 4 times. Our 91.69, which is pretty good, so we should be up about $1,020, give or take, here in about 2 minutes. If we could back off and get down to the 90 level, we could make up to about $1,600 on $400 of max risk. Why did we go into the 90 mark here? A few reasons. I think the expected move for Nike, let me just look at the options market. If we go over here, all products, NKE, right here, the expected move from yesterday's close was $3.96 on top of 87.18. So $4 puts you at 91.20 is the expected upside market maker move. That's the +1 standard deviation. For the life of these options expire Friday, $4.29. Most of that move would happen last night into today, which is earnings. So this time the expected move worked extremely well. So that's why we kind of nestled it up into the 90 level. Could have done 91 or 92, but that's fine. We just did it into the 90 level. So looking pretty good. We will manage that trade here in the open. Should be a good win. We also have the trade in our longer term stock portfolio. Let me just take a look at that. RIA. Yeah, right there. So we have a good size, almost a 4% allocation there in Nike. So should be pretty good here on the open, and we'll manage that trade accordingly. But I do think Nike has more to go. Up into the 94 to 96 region, there's a nice cluster of fib up there following that push. So let me just watch to see how this thing opens. Kind of curious to see where they open the options. Let's bring them over. Trade. Any members in here who have the trade on? Looks like the options aren't open yet. Come on, you can give us more profit than that. Keep going. 300, do I hear 400? Come on. All right, so we got to wait for some of that decay to come out, but it should be pushing up there a little bit. Oh, we're up at 92.09, so we're getting a little far away. We got to back off here a little bit. If we keep pressing the bid here, get up towards 93, or we're just gonna take our profits. But I'd like to see it move down to about 91 or 90, and that would be a better profit. Okay, so that's Nike. A couple other stocks to keep an eye on. One that I am watching is a high flyer, is Roku. It has pulled back in a pretty good support. This is a zone you really want to watch. Roku has dropped from 175 down to 98. I mean, if you loved it at 180, I love it at 98.
Twice as much.
Holy cow, right? What a move. So I do see us pulling back into a possible just A wave of 4. I don't think it's going to be all of 4, but you should be able to get a bounce from this zone from 95.5 to 87. If you break through 87, this thing is in big trouble, because then you start to move into invalidation, which would be 76.71, invalidates this whole interpretation. So if Roku is going to survive, this is your zone, but you also have to clearly define the risk. Let me just do this. Let me pull that A. So let's just put an ABC on there for now, but we should find support down to this zone. If you don't, you definitely want to stop out and not hold on to Roku. Another one that's come off a whole bunch, a high flyer, has been Twilio. Let's take a look at him right there, TWLO at 108.5. Same kind of situation with Twilio. This guy really needs to hold this 105 area. If you start breaking 98, the upside is very much in doubt for Twilio, and you don't want to be involved. But the risk is this right here. That's what you stand to risk versus what you could stand to make on the upside. Another one that's been a core holding that has the exact same setup. It's amazing how similar a lot of these guys look is Starbucks. ABC down, support 87, parallel channel drawn by the Elliott waves. You have your support zone right down in here. If you start breaking through 85, you've lost channel support, you've lost the ideal fib zone support. There's much more downside to go if you don't hold, but I think this is a really nice value in here as well. But we just need clarification from the broader markets. We have the S&P pushing higher. Remember, we have enough, as we said in the beginning of the webinar, to constitute that as an ABC correction. That could be it. And if we get any kind of clarification as to what happens with the inquiry and the impeachment, anything with China, I think that this pattern will be fulfilled, and we'll continue to do that. Okay, guys. Alex and Terry, thanks so much. I'm just going to let them know again about tonight, and we'll sign off on that. So, guys, thanks for a great job on the webinar, and I'll catch you in the members webinar. Okay.
Sure. See you guys.
Right, see you guys.
Okay, so good job with those guys. Thanks for joining us here, guys. And again, we have a webinar tonight at 8 o'clock Eastern time. Tradinganalysis.com/ride. I'll show you what's going on here. We're going to have, it's a repeat of the webinar that we did last week. We had a lot of attendance. We had some few tech issues as we're kind of pushing the boundaries with the technologies here, but that's okay. So we are ready to go for tonight. Here is the sign up page. It will be basically riding the volatility wave, kind of a look at all the tools that we use to approach the markets, trade the markets with our live capital every single day. So it's going to be an informational webinar, should go about 45 minutes. We'll talk about the key intermarket fundamental indicators. Let me just zoom this out here a little bit. Key fundamental and intermarket indicators we're looking at to confirm how we're going to play the moves here in the coming months and years. Precise technical forecast of the market position and where we see for the next couple years down the line. Look at our actual options and stock portfolio to show you how we're currently positioned. I'll show you two of my preferred option hedging strategies that we use in the portfolio. And obviously answer a lot of questions and be very interactive. It will be on YouTube tonight, 8 p.m. Eastern Standard Time, 5 p.m. On the West Coast. 10 hours to go. So be sure to sign up for that. Other than that, guys, I hope you enjoyed the webinar, and appreciate you spending your Wednesday morning with us. Go ahead and hit the thumbs up button on YouTube. Leave a question, comment, insult, anything you want in there, and we'll have a look, respond, and we'll see you guys on tonight's webinar, and we'll also see you next Wednesday for the Wednesday live stream if we don't see you at tradinganalysis.com first. See you guys. Have a good rest of the week.